Okay, step 3 is to reduce your expected family contribution number if possible. As you can see from this graph, if you are located where that X is on the graph, what we call financial positioning is where we try to lower your expected family contribution number. By lowering your expected family contribution number, and if your student is an exceptionally gifted student, that's where we can get the free ride scholarships, or at least free tuition. Maybe we have to pay room and board, but the lower our expected family contribution number is, and the more exceptionally gifted our students are, the more free money we're going to qualify for. Now, if you have a high expected family contribution number, then in a lot of cases, you're going to have an easier time getting accepted to the school of your choice, even if your student isn't an exceptionally gifted student, because you might be paying full price, but the schools will still take you, or the schools will still accept your students if you have a high EFC number because they know you're paying full price. And of course, if we have a high expected family contribution number and an exceptionally gifted student, then we're still going to get those discounts we talked about in the last lesson with the merit-based scholarships that are available. So there's a lot of ways to position your family in family financial positioning as well as student positioning to truly maximize the free money. So the idea is that the lower the EFC, the less you pay for college, unless, of course, you pick the wrong college that doesn't offer a lot of financial aid. So how do we lower our expected family contribution number? Well, it's similar to tax planning. The colleges and the government do not want you to know that you can even lower your expected family contribution number. And every family will have a different expected family contribution number each of the base years. So there are many ways to reduce your expected family contribution number. For example, don't save for college in a 529 plan, Coverdell plan, or prepaid tuition plan. They are going to use that money against you in the EFC calculation. If you do have that money, spend the 529 money from the siblings, younger siblings, on the older siblings. Have multiple kids in college can also significantly reduce your expected family contribution number. Some families don't feel like they are ever going to qualify for need-based aid because they have too high of an income. But when you have multiple kids in school, a lot of the numbers are dramatically reduced, and a lot of times you can qualify for financial aid. Minimize your income whenever possible, of course. Increase your taxes. Put your retirement money taxed now instead of taxed later. For example, Roth IRAs instead of traditional IRAs, or Roth 401ks instead of traditional 401ks. Don't put assets in the kids' names like UGMA and UTMA accounts. There are some tax advantages to that, but assets under the kids' names are calculated a lot higher than assets under the parents' names. Don't overvalue your home. This is not a time to put your best foot forward. Start a business. Most new businesses show a loss. That can help reduce your taxable income. Move taxable brokerage accounts into business or retirement assets to shelter those assets, which we will discuss later on. File a 1040A or 1040EZ if you qualify. That can, in a lot of cases, get your EFC to almost zero. Become a 1099 independent contractor instead of a W-2 employee, simply because a lot of times you can write things off on your taxes, reducing your income. Push bonuses into the next year if possible, but remember you have 4 base years. So depending on which base year you're in, that may or may not help you. Put rentals into an LLC. That will help you for the federal methodology calculation, but not the institutional methodology calculation. So you want to consult a professional to double check for sure on that. Avoid large capital gains during the base years if possible. Use home equity to pay off high interest debt when possible, because debt does not help you in calculating the expected family contribution number. But the equity sometimes will hurt you. So if you can use the equity to pay off debt, that will put you in a better situation. Don't include businesses with fewer than 100 employees on the FAFSA. And don't put the wrong numbers on the financial aid forms, which we will discuss in more detail later. Once you have ran some scenarios to see how much you could lower your expected family contribution number, you can see a before and after in a chart like this. Now, just because you are lowering your expected family contribution number does not mean that you are saving dollar for dollar. Remember, based on the schools, it depends on how much of your need they are meeting. They might only be meeting 40% of your need. So by creating a bigger need by lowering your EFC number, that does not mean a dollar for dollar savings. So you definitely want to do your research to see how much lowering the EFC number is going to help you at each of the schools. As you can see here, by lowering your EFC number for this family, it is going to save them about $1,800 a year from Texas, but $19,000 a year from Dartmouth. So when you're considering the pros and cons of what you need to do to lower your EFC number, you want to determine how much it's going to help you and how much it's going to save you in overall money at each of the schools. Now let's take a look at a couple of different case studies to tie all this together here. First of all, the first case study we'll look at is a father who is 61 and a mother who is 49. They have 2 students, and their adjusted gross income is $181,000. Now, a lot of families with high income do not think that they are going to qualify for financial aid. But as you can see in this report here, that by maneuvering some of their assets around and lowering their expected family contribution, it is saving them $15,000 off their federal methodology EFC number and $33,000 off of their institutional methodology EFC number. But once again, how does that translate to the schools that they're looking at? Well, in this particular family's scenario, they were looking at a lot of the top tier schools with high sticker prices. So lowering the EFC number as much as possible is significantly helping them on an annual basis in savings. As you can see, ranging from $16,000 on the low end to $35,000 on the high end. And in a lot of cases, this is per student if you have 2 kids in school at the same time. So this can significantly reduce your out-of-pocket costs for college. Now, in this next case study, we'll look at a father who's 51 and a mother who's 47 with, once again, 2 kids and an adjusted gross income of $229,000. Once again, high income. In this family situation, they were able to lower their EFC number a little bit, $2,000 and $8,000, which is better than nothing, not as much as in the last scenario. But in this particular scenario, based on the schools that they're looking at, for Sonoma College, for example, it is not even helping them at all. So if that's one of their top picks, then making these changes is not going to help them to qualify for more need-based aid at Sonoma College. However, at Stanford, it's helping them to save about $7,000 a year. So once again, it's not just about lowering your expected family contribution number, but it's about choosing the correct schools that are a good academic, social, and financial fit. In this case study, we have a father who is 53 and a mother who is 50. We have 3 students in this example with an even higher adjusted gross income of $339,000. Now, this family, with shifting around some of their assets and lowering their expected family contribution number, they can lower it by $13,000 for the federal methodology and $43,000 for the institutional methodology because they had a lot of equity in their home, which is calculated on the institutional methodology and not the federal methodology, which is why there's such a big difference for the federal method or for the institutional methodology. And as you can see in this example, once again, it does not help them with UNC in the middle there, but it definitely helps them with the other 4 schools on this list. So once again, depending on which schools they are looking at, it depends on how much it can determine how much they are going to save by lowering their expected family contribution number. Now, in the next lesson, we'll talk about how to graduate in less time.